what has been interesting is oil's reaction to these debt ceiling talks. We saw prices rocketing up on hopes that a deal will be able to be reached, but at the same time, rising rates, recession fears, really keeping investors on the sidelines here. How do you see oil prices shaking out over the next few months?
Good morning, Dan. So indeed, the debt ceiling impasse was a major negative for sentiment pretty much over the past fortnight. And it combined with some of the other factors that you were just mentioning, economic worries broadly, to batter crude quite a bit. Now, we've seen an uplifted crude because of some encouraging comments, as you mentioned, from Joe Biden and Kevin McCarthy. I would imagine perhaps a little more headroom for oil prices going forward, from a relief rally as and when a deal is announced. But, broadly, I think the other factors which were prevailing before and will come back to the center stage after this debt ceiling crisis is over, namely, worries over the U.S. credit crunch, definitely worsened by the banking stresses, and generally lackluster recovery in China. I think those will continue to weigh on sentiment in the oil complex.
Indeed, and oil prices have fallen for 4 straight weeks now, Vandana. What's been interesting to see here is that when it comes to the outlook, so much hinges on what OPEC is going to do in June, now that we've seen prices drifting below the April supply cut level. Will OPEC need to act here to firm up prices?
Yeah, so we know what's going on, as we just discussed, on the demand sentiment side, right, which is rather weak, whether we are talking about US and Europe demand or whether we are talking about China demand. Now, if you put your attention to the supply side, of course, there are the OPEC cuts, which did give a bit of a prop to crude prices after the surprise announcement, but that didn't last. And to my mind, that's not very surprising because when you look at supply, quite a bit of attention is also on Russia. So, Russia had pledged way before the surprise OPEC cuts to slash its output by about 500,000 barrels a day. And so far, and they were supposed to do it starting from March, but so far the March and April data for Russia shows that the cut was just about half of that. So, Russia is not cutting as much as it had pledged. If you look at Russian exports, the IEA data this week was, made the market sit up and take notice that Russian oil exports, crude and refined products, at about 8.2 million barrels per day over March and April, were the highest post-invasion. So, Russia is not cutting. And then, that is also ultimately going to tie back to how the rest of the OPEC plus peers are going to feel. If Russia is not complying, then, the incentive for them to do so goes down as well. Could make for some very tricky conversations at the OPEC meeting.